The radio for the closer.
Don't worry.
As it's hitting the thing,
Don't
you
worry.
pull up the table.
Good afternoon, daily members. Let us close the market. Please, we'll have the closing prayers.
Well, closing gong signaling the end of trading on the floor of the Nigerian Stock Exchange this Thursday. Welcome to Business Nigeria. Once again this Thursday, I am Yemisi Lanre Idowu. With the global crude prices continuing to drop and worrying at that, as seen throughout October, the threat of a continued rise in U.S. oil production could drive prices down further. Notably, the West Texas Light Crude, WTI, hit $54.58 a barrel. Now, there is a fear of a precarious trade climate and the potential impact on global economic growth, which has continued to fuel bearish sentiment. That sentiment is what the global stock market is experiencing now, a meltdown due to this crude price trend, and stock price losses also extended across many African markets. And here in Nigeria, it's no different. Effiong Ekop joins me later in the course of the program for details on the day's close. He told me mid-trade that the bearish trend continues, and most importantly, there's been the buzz that the MPC will likely stay put amid rising headwinds, and true to the analyst predictions, key rates have been retained. Welcome once again. Well, let's begin right away. The Central Bank of Nigeria's Monetary Policy Committee has voted to retain the monetary policy rate at 14%. Well, the CBN Governor Godwin Emefiele says the cash reserve ratio was kept at 22.5%, liquidity ratio at 30%, asymmetric corridor at 200 plus and 500 the negative basis points there that we have it. Well, the meeting is ongoing, announcing the decisions, and the last one at that for the year. Let's begin discussions in earnest. Head of Research at Afrinvest, Robert Omotunde, joins me now in the studio. Yes, we've been expecting this, and because it's the last meeting of the year, many were hopeful, but many still thought that the CBN, the MPC, will retain prices, especially looking at the inflationary trend, and also ahead of the 2019 general elections, and what's happening in the global crude oil market. What's your take?
Well, the decision is not surprising, because we knew, before the meeting, that the committee will most likely stay put, in the course of monetary policy disposition that they've had. And rightly so, the governor mentioned it, that even though there have been no major tweak in the policy parameters over the last 5 to 6 meetings, in fact, so far this year, nothing has happened. It shows that there is the belief of the committee members, in the current policy, disposition of the Monetary Policy Committee. But again, you rightly nailed it, talking about the developments within the global space, which of course the committee also alluded to, the fact that we have policy normalization in the US, the fact that we have issues around Brexit, even more threatening now, and then we see new possible threat of imposed sanctions on Iran, of course, which again can have its impact on the global oil prices, and Nigeria, of course, is particularly disposed to that. So what we saw today was not really surprising, in the sense that we know that the course of tightening, which the committee has treaded the path over the last few months, is what we believe is optimal for the economy, looking at the various variables, within the economy at the moment. although there are arguments for easing, you know, but that has taken the back seat over the last 3 meetings, you know, because there are more threatening issues. Policy normalization is one of it, you know, the threat of inflationary pressure mounting again, you know, ahead of the 2019 elections, and the fact that we still have some of, you know, the domestic issues to worry about. You know, there's a clamor for minimum, you know, wage increase. You know, the committee has to be anticipatory of price pressures and take proactive decision in order to, you know, stem whatever tide, you know, that may arise from that. So the decision, in our view, is apt, and we believe that's what is optimal for the economy at the moment.
Unfortunately, the year is running out, and I must say the CBN is threading in choppy waters, honestly choppy waters, and how best to navigate that choppy waters is what is at the back of their mind in making their decisions, especially, yes, just yesterday, as they were meeting, the NBS released inflation rate figures for the month of October, and we saw a decline after about 2 consecutive month-on-month upward trend. Exactly, but do you think that would have had any influence?
Well, not necessarily, because, I mean, the committee mentioned it, I mean, the CBN mentioned it while reading the communique, that the impact is muted on this current decision. Beyond that, it's not sustainable, because we know that there are pressure points to watch out for. It's 2019 general elections, and the stakes are high. You know, why the current government wants to continue, you know, the opposition is also trying to come in, so the stakes are high. You know, the possibility that there will be much more spending, you know, in trying to campaign, you know, will also have its own impact on consumer spending, you know, and this has its own inflationary, attendant impact that it's going to have on the economy. So it's good that inflation moderated for the month of October, printing at 11.2%, but it's not hurry yet. We shouldn't be happy about that yet, because we know that there are other pressure points. You know, notwithstanding, we believe that if there is any need to take any further tightening measure, the CBN, you know, that's the bank in this case, because the committee will not meet again until January next year. You know, they will not hesitate to use other, you know, monetary policy tools, such as the OMO, for example, you know, to intervene. As we speak, OMO, 365-day instrument, you know, for OMO Treasury bill is printing at around 14.5%. You know, the committee can, this bank will not hesitate to take it higher if there is a need to attract, you know, more foreign investors, and even to keep, you know, the locals, in order to sort of reduce the pressure or possible pressure that may come on the foreign exchange market, you know, because this is also very key as we move into the elections, and there are fears of capital flow reversal, you know, because of the polity, and the polity and all of that risk associated with elections.
Fears of capital flow reversal, and the global crude prices. When we have that in the system, we know how it could be, but we see that the global prices are dropping. First off, do you think there would be money in circulation with the drop in prices? And secondly, do you think Nigeria has learned its lesson?
I don't think we've learned our lessons. You know, sadly, the last episode of the economic downturn, talking about the recession of 2016, which we managed to come out from in 2017, you know, there were tough lessons we needed to learn in terms of restructuring the economy, in terms of diversifying government revenue, even though the current government has been talking about it, but we are not sure that much has been achieved. You know, so we are still largely an oil-dependent economy, you know. We wrote in our last macro note that it's such that we're just waiting for the next oil price drop. You know, waiting for the next oil price drop. This cycle continues again, where the central bank is trying to protect the domestic currency, you know, by managing exchange rate, because the reserves are not enough, you know, to support the domestic currency, you know. And right here now, we have two issues in our hands. The fact that elections are coming, you know, generally investors want to be cautious. You know, we don't want to add another oil price crisis, you know, into the current issue we already have, you know, because it can have very dark consequences for the economy, you know. So, but what we need to do, you know, again, this may be the discourse for you know, for whoever is the new government that is coming in, you know, which was what we mentioned when
in fact, don't you think they should realign their campaign at this time?
Well, I mean, the two dominant parties, you know, have released their manifesto, you know, it's already out there, you know. In fact, we are doing an analysis of the two, you know, and trying to, you know, see how an average man on the street can you know, analyze them and make sense out of them. But what thing is critical? The fact that there are structural reforms that we need to take. You know, some of these decisions may be very tough and may be politically unpopular, but they need to be done nonetheless, you know. But I'm not sure any of the two dominant parties have the courage.
Thinking in that direction?
You know, I'm not sure they have the courage, because what you need to do, for example, if you talk about subsidy, everybody goes, you know, wild, you know. But again, when we have to take structural reforms, there are pains to be borne. You know, if we are not ready to take those pains, then we are not ready to
I don't think
move
Nigerians
forward.
are really ready for that, looking at the political climate.
Exactly.
And
I mean, and of course, the two parties will want to win elections, so they would do what they have to do in order to win elections, you know, sadly. But again, that's talking about public choice and you know, which direction, you know, an individual should take. But sincerely, there are structural reforms that need to be addressed, you know, before it can be said that we've learned our lessons.
Okay, that's talking fiscal way. Now let's go back to monetary policies of the CBN. And yes, we talked about the variables that were important, and the MPC had reiterated its goal of maintaining prices, exchange rate stability, and also in pursuit, all this in pursuit of economic growth. But looking at the year, looking at foreign exchange markets and what the CBN had to do over the years, especially in the face of exiting recession, do you think the MPC or the CBN had been able to achieve its goals?
To some extent, I would say yes, even though we are not at a desirable level. You know, the desirable level is to get to a point when exchange rate management and the determination of, you know, exchange rate in Nigeria is purely market driven. As we speak, we have multiple levels of pricing, you know, in terms of exchange rate. You know, the one that is most closer, I would say, to market rate is the I&E, that's the investors and exporters window. You know, in fact, there are some concerns, you know, at the level, at the rate at which that even the rate at the I&E, you know, is, you know, because again, market players, both the buyers and of course the seller, the CBN being the major seller in this case, you know, they've formed an opinion of like a magic number. You know, it seems like it's around 360, you know, and the exchange rate will hardly move. Even when the fundamentals are changing, you know, the development in the global market, you know, around oil prices is a fundamental factor that should change the way exchange rate is priced. Perhaps we should have seen some depreciation now.
Exactly.
You know, but market players will not go.
And the list we saw was 358.
Exactly. So market players will not go in that line, you know, because again, they know the policy disposition of the central bank. They are there to maintain exchange rate stability, and the central bank will stop at nothing in using its reserves to defend the currency
I was going to say that, really, looking at what we have the global prices at, the CBN has been deep in the reserves to intervene in the
unfortunately, the CBN has to do that because, again, remember...
Well, they have enough to do that. Remember, if we go on...
Remember, when we talk about fears of capital flight, you know, we're talking about foreign investors who have brought in their, you know, their foreign currency, their dollars in this case, you know, since the I&E FX window was opened, you know, I mean, over $20 billion have been inflowed into the economy, you know. So if there are concerns and people have to move out their fund, you know, the moment the central bank cannot meet up with the demand, being the largest supplier, then there's already tension created in the system. The effect is going to be felt at the parallel markets, you know, where you will see, you know, various market actors trying to arbitrage on the system, you know. But again, the central bank has to do what it has to do. Thankfully, we have some level of reserves that we could say is comfortable, you know. The central bank can drain that reserve to ensure that exchange rate is stable. And again, you still cannot dissociate the activities of the central bank from the fiscal manager. So because elections are approaching, we're not sure that there will be any likely, devaluation officially or a major depreciation happening even from the market side.
All right, we would have to go, but let me ask you before you go now. We see there's a global meltdown as we have it now, especially the reactions from the global crude prices. And African markets are also suffering this at the moment. But with this latest that we have from the MPC, are we likely to see any turnaround in the global markets, especially the Nigerian markets?
But there's no major shock the current decision is having on expectation of investors. So, I mean, if I would say this is in line with market reading, and again, we believe that other factors will continue to play out, other risk factors within the economy. But definitely, there is no major shock that this current decision of the MPC has introduced to the dynamics of the market.
Of the market. All right, we'd have to leave it at that. Robert Omotunde, thank you so much for your time. We appreciate it. Yeah. You're watching Business Nigeria. We'll take a break, and when we come back, we'll cross over to the trading floor where Effiong Gekop will be bringing us details. Glad to have you back here watching Business Nigeria. And despite the bearish trend experienced mid-trade, the market struggled to close on a positive note at 0.05%. All right, let's head over now to the Nigerian stock market. Effiong Gekop is standing by to bring us details. Hello, Effiong. Mid-trade, you told me it was a bearish trend, but we see it closing marginally. Tell us more.
Yes, it reversed marginally a few minutes before we touched the gong. I think it must have been a reaction to what information we received from Abuja that's concerning the MPC being left at 14%. I have here a stockbroker, Jamil Mohammed from APT Securities, and we shall be doing justice to the discussion. Jamil, welcome.
Thank you. It's a pleasure to be here.
You on the trading floor, I mean, you stockbrokers, you were not doing so much in the early hours of the day. Was it so much the expectation that you had from MPC, the result from Abuja?
Actually, the MPC meeting is, they've discussed what actually they want to leave the rate at 14%. And what it means is that so far as the CBN see the exchange rate market stable and also inflation rate coming down, as we had it yesterday that the MBC has released the result and it came down for just about 0.2 basis points. So they will still keep the market, the rate at that 14%. But what we are saying here, how does it affect the market? The market is a bit stable for now because of the fact that the effect on the market is still the way it affects the economy. So the markets, still continue to trade in that line. You see a situation whereby you are not seeing much inflow to the market. You can see that up to the end of the market trades about 15.2 billion. And out of this 15.2 billion, you see a situation whereby Zenith Bank alone did 14.4 billion. So, in value. So the activity in the market is a bit silent, and this is what is expected for now and to continue going into the future.
For so long a time, we've got to bear with the lowering trading atmosphere. So is that what we are going to see from now until the end of the year as we are approaching election period?
Yes, exactly. As I used to say, that this market is information driven, and you should expect that the information available in the economy is one to determine what happened exactly in the market. And for now, we don't have new information. The information that is available is the one affecting the market, and as long as there's no negative information or otherwise, we should expect the market to continue this behavior going forward.
Jamil, what is your take about the warning to foreign investors by a top British secretary, the ex-secretary in the British government, that investors should be very cautious coming to play in the Nigerian economy?
Actually, what I can see there, the person is speaking from an individual level. He's not speaking from an institutional perspective. Now, my own take is that when I went through the statement, I realized that she's cautioning the investor based on the corruption fight of the Nigerian government. And though there are some issues around that, and if you see what has been happening in the market, I don't think there is a relationship in what he's saying as regards to the market. You can't say that people should not come in because you are having issues with corruption fight of the present government. So to me, you can discard that information since it's not coming as an institutional advice. It's just an individual advice.
Jamil, let's leave it there. Many thanks for coming to the studio this afternoon.
Thank you very much.
Jamil Mohammed has been with me here. He's a trader from APT Securities. Back to you, Jemisi.
Effiong, just before I let you go, is it likely with what we have seen at the Nigerian stock market today, are we likely to see some such at the African stock market? We know there's been that bearish trend, especially with the crude prices dropping.
Not only in the African setting, it is global that many of the markets for a very long time now, they have been experiencing bearish trend. Yesterday, we had it in Egypt, we had it in Botswana, we had it in Ghana. And even looking beyond in the Asian market, they were all down. The reason is that they are responding to what is happening in the oil or the larger energy market and the way America is also manipulating the oil trend. And so we see that they really need to monitor what's happening in the equity market and they equate it to the energy market. So for now, we expect that there will be downturn in so many of the stock markets across the world.
All right, Effiong Gekop, thank you for the update from the Nigerian stock market and Africa in general.
A pleasure.
Let's update you on other stories now. The federal government and United Nations Industrial Development Organization have signed a $60 million new country program for Nigeria to cover industrial governance, research and statistics, and micro, small and medium enterprises development program. The program is part of efforts to accelerate the country's industrialization process through the economic recovery and growth plan. Now, Minister, Industry, Trade and Investment Okechukwu Enelama signed the deal on behalf of the government. The Director General Consumer Protection Council, Babatunde Irukera, says the increase in population in Africa will boost consumer spending from about 1.5 trillion naira in 2015 to about $2.1 trillion by 2025. Irukera advocates the implementation of strategies to reduce poverty and achieve significant economic growth. He says the growth will be driven by key factors such as a young and growing population, rising incomes, rapid urbanization and widespread adoption of technology. He noted that a rightly regulated market would provide satisfaction and encourage spending. Well, despite looking upward Wednesday, oil prices stayed downward at various market centers early Thursday. Market analysts say that oil dealers are sensing global losses in the stock markets, just as we said earlier, pricing down oil benchmarks. Crude oil prices have dropped beyond 20% in 4 months, a condition that now threatens budgeted revenues of some OPEC member nations. Well, OPEC member nations like Nigeria may have to realign their budget and look deeply into the diversification agenda just to avoid cases of dropping oil prices, which was experienced late 2016. And as a result, Nigeria went into recession. But that's a pointer for many OPEC member nations, which base their budgets on revenue earnings from oil. And that's Business Nigeria for today. Many thanks for your time. I am Yemisi Lanrido.